Lots of volatility in the stock market last week, and for some investors, that brings out a lot of fear. But if you're a trader and you can take advantage of it, then you can really profit from it. I will show you this week some of the ways to profit from market volatility. Plus, I'll do my normal market analysis. We'll figure out if the market is in a boom, bust, or boring type phase. That's all coming up right away on the Stock Scores Market Minutes. So investors tend to dislike market volatility because it makes them worried. You see the market go down a lot, and then it goes up a lot, and then it goes down a lot, and that's the kind of week we had this past week, and that can arouse a lot of emotion. However, if you are a trader, then volatility is good. And volatility comes from market uncertainty, from investor uncertainty. So if investors aren't really sure about what the future of the economy is or risk factors in the economy, then you get lots of volatility. And again, when you see those headlines, negative headlines about banks going under, about interest rates being raised, that creates a lot of fear. But it also creates volatility. And what I want to show you now is how you can use that to your advantage and compare the past week, week and a half with what was happening earlier in April. And you'll see just the power of volatility and how it can affect trading profitability. So let's imagine we're doing a very simple trend trading strategy. So in other words, if the upward trend is broken, you go short. If the downward trend is broken, you go long. And so you can see here, you would have lots of signals in the last little while. So you'd have a buy here, and then you'd have a sell, and a buy, and a sell, and a buy, and so on. Now take that same strategy of buying breaks of trend lines and apply it to when the market had much less volatility in the latter 2 weeks of April. Well, now the profitability of that strategy doesn't even really make sense anymore because you're buying and selling so close at the same price because the market really lacked any significant trend. And so when you have these low volatility markets, yeah, you may not have the headline catching, fear creating headlines, but you also don't have trading opportunities. So the key thing is to be willing to go short and long when you've got lots of volatility and using the volatility to your advantage. Let's take a look at the oil market and I'll show you how this worked there as well. The normal oil market, going back to the start of April, was in this very narrow range. If we then say, okay, we're going to short when we break down through support, we have a nice 2-day move. And then we break up from a rising bottom right here, and we go into a 3 or 4-day move. And then we short the market here and go into a 2-day move. And then we buy the oil market there and go into a 3-day up move. And the difference between the buys and sells makes sense because there's lots of volatility. You know, you could buy the oil market there at 25.5 and then 3 days later sell it at 28.5. That's a 10% profit in 3 days. And there was numerous opportunities to make those kind of trades over and over again in the oil market in the last few weeks because there was uncertainty, and uncertainty brings volatility. And so volatility is good if you're a trader. If you watch headlines, if you're swayed by moves in the Dow 300 up, 400 down, then it is worrisome, obviously. But take a different thought process toward volatility and realize that for the trader, volatility is a good thing. All right, let's now get into this week's market analysis. We had a bank failure. We had a Fed interest rate raise. What does that mean for the future direction of the markets? Are we going into a boom cycle, a bust cycle, another stock market crash, or are we just going to be boring and go sideways? Well, if I jump into my S&P chart, we start to get a sense. So let's look at the 1 month, 60-minute chart. And you can see here that the trend, despite all this volatility, is basically sideways. We have gone nowhere, and so it's been boring. It's a neutral market. It's boring on that time frame. Looking at the 3-year weekly chart, we have rising bottoms, so that's optimism. We have resistance. We've talked about this resistance level for a while now. We need to make that breakout through the 419, 420 mark on the SPY before we can get too optimistic. If that can happen, then we should start to move back to the old highs and we might get a nice little spring summer rally, but we haven't made that break yet. So I still want to be fairly neutral on US stocks. Looking at the Canadian stock market, T.XIU, there's the daily chart. It's more or less neutral, sideways, with some moves within. Again, using a trend breaking strategy, you've got profitable trades there because you can be long and short every time the trend is broken. And that's what the volatility does for us. But if you are a longer term investor, you've been sitting in this market as it goes sideways, it's a little boring. On the 1 month, 60-minute chart, we're pretty much sideways, but again, in an increase in uncertainty the last 2 weeks. 3-year chart, much like the S&P, we have rising bottoms towards a line of resistance. We need to break out through that. If we do, upside limited by the resistance at the old highs. So it's a stable market, but not a lot of excitement. How about commodities? Let's take a look at that oil market, USO. You can see the pretty strong selling pressure the last couple of weeks. We had a breakdown in the oil market. You'll recall if you watch this video every week that I was bearish on oil when this happened. And then we made this comeback rally for 4 weeks. We rallied into resistance, and I was thinking maybe the market was going to hang on and not move lower, which is what this breakdown signaled. But it moved up, it got to resistance, and now falling back again. So we're back into a somewhat negative market until we actually break down through this floor. I wouldn't get overly pessimistic, but it is a bit of a concern. Where you see the weakness is in that short-term chart. Here is the intraday chart going back a month. We were pretty oversold on Wednesday, and we can say we're oversold because of the distance away from the trend line. And now we're working our way back up to it. When we get there, we'll probably get stuck, roll over, and move lower. However, if we instead build a rising bottom and then break that short-term downward trend line, then you can go back into being short-term optimistic on oil. How about gold? GLD is the symbol there. And you can see that the daily trend is up. The 3-year chart has been doing well, but we're bumping up against that long-term resistance, which is likely to hold the oil market back. So that's why I've got a neutral rating on on gold. Looking at the 1 month, 60-minute chart, basically sideways. We've been stalling under resistance for a month. Yeah, we had 2 or 3 days of rally last week, and then we had a big gap down on Friday. All right, let's move along to currencies. UUP is the US dollar, and it's boring sideways trading. On the 1 month time frame, you can see neutral. 3-year weekly, you can see a falling top has built, and that's negative. However, until we get a decisive break to the downside of this upward trend line, I wouldn't get too negative on the US dollar, but we shouldn't ignore the fact that that sentiment stock score is low, that we are building falling tops, and we could at any moment really start to move to the downside on the US dollar. How about cryptocurrencies? GBTC is the Bitcoin ETF. You can see on the daily chart, the trend is up, so that's good for the position traders out there. 3-year weekly chart has made a pretty good turnaround signal. We've switched from falling tops to rising bottoms. Yeah, a little quiet the last 4 or 5 weeks have we stalled, but we're still in this cycle of rising bottoms. It's when you look at the 1 month, 60-minute chart that you see it's been a little bit sideways, not a lot of action. But in the last few weeks, we are improving. We're building those rising bottoms, slowly inching higher. I don't think we should be too, bullish on Bitcoin, but it is a little better. Now, someone asked me last week to take a look at the chart of Ethereum, ETHE, and it's also slowly building rising bottoms. Not as strong as Bitcoin, still quite far below this resistance level, but getting better. The 3-year weekly chart shows it's also trying to get better, but it is, I would say, lagging Bitcoin. It's not doing as well. Let's take a look at the interest rate charts. TBT shows us what basically is a good proxy for interest rates. It shows us sort of the direction of interest rates in the bond market, and you can see that the trend is down. We're moving towards support. This is a descending triangle pattern, and if we ultimately break down through the floor in that pattern, that means interest rates going lower. Yes, we could break the downward trend line. It's not what is likely to happen, but it could happen, so we watch for that. But I think interest rates, as predicted by the bond market, which is what this represents, more likely to go lower than higher. So if you look at my ratings then, US stocks and Canadian stocks neutral on both time frames. The same for gold. Bearish on both time frames for oil. You could call the long-term outlook neutral still because it really hasn't made that breakthrough support, but I think better to be on the cautious side with oil for now. Neutral on both time frames for the US dollar. Long-term bullish on Bitcoin, but short-term neutral. And then interest rates neutral on both time frames. All right, we'll take a look now at the day trade of the week. I have a service at StockScores.com called Active Live, where you can watch my analysis screen. I do teaching every day on how to day trade the market using a number of different strategies and my own indicators for TradeStation. And one of the things that we always look for are stocks that are behaving abnormally, stocks that have alpha. So this particular stock is IBRX. If you go look at the daily chart of IBRX, you will see that it's been moving up nicely the last couple of weeks. So it's got good upward momentum. And then what stood out on Friday is the volume started to pick up again early in the day, and it built an ascending triangle pattern with a breakout. Now it's hard to see, but there's a little yellow dot there. That yellow dot indicates that the stock made a statistically significant price jump on the 1 minute interval. I have an indicator for that called the action candle indicator. It's something available to my students at StockScores.com. If you want to learn more about that, go to the trader training section of StockScores.com and you can learn more about that. But for now, let's just go through the profitability of this trade. You'll notice that there's a bunch of green and blue and red lines on here. Those lines represent the reward for risk. So our entry point is here, our stop loss point is down at the red line, and our risk reward multiples are based on the yellow line. Well, this stock ultimately made a pretty good run higher and then gave a sell signal right there. So this is a strategy I have called a superhero strategy, and that's something I teach in my active trader course on StockScores.com. It gave us a sell signal there, and that was at 6 times risk. So that means that if we took $100 of risk, this trade had about $600 of profitability. I'm rounding off for the sake of simplicity. If you took $1,000 of risk, then it was a $6,000 profitable trade. The reason this stock was worth trading is because it has alpha. And that's the lesson I want to really emphasize this week, is that because the market is a little bit boring, stuck in the sideways range, you have to focus on alpha. You have to focus on stocks that are trading with abnormal volume, able to move up while the overall market is moving down. There's not many of those stocks every day, but there are every day 15 to 20 stocks that have alpha. And of those 15 to 20, 2 to 5 good trades are generated each day from those. And that's something that we're always working on finding. We've got real-time analytical tools that I've created. And again, if you want to learn more about that, go to StockScores.com, Trader Training. Check out some of the videos there and you can learn more about that. Well, I hope that you've enjoyed this week's video. If so, click on the like button. What do you think? Is this volatility going to continue, or are we going to settle down into another low volatility, boring trading pattern? What are your thoughts? Let me know in the comments. Most importantly, make sure you're subscribed to the channel. That way you get updates every time I upload a new video. It's all free, so you may as well. And as always, make sure next week you trade well.